Okay, I think that is working. Yeah. What's up, guys? It's been a while. I've been in Korea the past 5 weeks, so I haven't been able to do any of these videos for fundamental analysis with microcap stocks and big runners and all that stuff. So I've been going through, taking a bunch of screenshots of a bunch of runners that's happened in the past, I don't know, 5 months. Trying to test out different moving averages and stuff like that. And I came across a play that's pretty informative, I think, if you dive into the fundamentals of stuff to watch out for on these 100% pre-market gappers. And trying to figure out if you should be shorting, if you should be longing, what you should be looking out for, that type of stuff. So this is ADAP. And the thing about ADAP, and as you see, crazy high volume, super choppy. Kind of seems, a lot of people think when volume gets this high, a lot of this is unpredictable. Don't short, don't long, all that stuff. And it's kind of ridiculous, honestly. There's a ton of money and very predictable money to be made here on these types of plays. So, but you kind of have to have an understanding of why is the stock up? What's the fundamentals of this company? Who's manipulating the stock? Why are they manipulating it? How are they manipulating it? How can you use that information to short the stock, go long, all that type of stuff. So let's just dive into the fundamentals really quick. This is just their 10Q. This is actually their 10Q from the 14th, because remember, this play is actually on May 29th, 2020. So whenever you're like reverse engineering old plays, always try to pretend like you're in that moment, right? Like, okay, if this was that day, what would I be looking at, right? So we're at BAMSEC. Here's the ticker. This is just, there's nothing really in this amended 10Q. All the information you're going to want is actually in this 10Q. And we go down here, and first thing you always see is the balance sheet. And a couple things the note here is, first of all, they have 86 million in cash, which is not your typical microcap shitty stock that just pops in the pre-market, then fades all day, and then closes like 70-80% down from where it popped. But also it has 110 million in marketable securities, which you only really see this on the current assets of like pretty good companies. Usually companies with market caps at least 200, 300 million, even higher. This pretty much means they have enough cash to go buy securities just as like a short-term investment vehicle that they can sell at any time they want. So current assets, 227 million. And then you can compare that to their liabilities. And their liabilities super low. Current liabilities, a tenth of what their current assets are. Stockholders' equity, 186 million. So first of all, just from looking at this is not your typical, biotech trash stock. Let's pick a random stock. That's absolutely garbage. SONN. This is 3 million in cash total. 3.5 million current assets, 3.3 million current liabilities. They barely have enough money to pay off their current liabilities. Kind of tells you this is like the standard absolute garbage that is so easy to short if you know what to look for. But that's not what ADAP is. So first of all, you kind of know that, okay, like don't expect some type of like nasty 60% crazy fade unless there's like some type of insane dilution that exists. But even then, at this market cap, even with a ton, like a huge ATM or a ton of warrants, it usually doesn't fade crazy hardcore. Then you go down. It's pretty common for biotech companies, even ones that are worth 300 million, 400 million market caps. They have almost no revenues. Very common. Like, yeah, they're going to have huge negative net income. So their net loss is 28 million in 3 months. Like, it's just common. It's just super, super common. And then we go down to the cash flow statement, and we notice that, first of all, this says net cash used in operating activities, and this number is actually positive, but that's only because their deferred revenue is 50 million for this 3-month period, which is not like actual revenue. Like, they're just adding it back into their net loss that produces a positive net cash used in operating activities, but this company is losing money every single month. This is just accounting bullshit. So this company doesn't actually generate money, right? Their revenues is what, like 761,000 in 3 months. So they're making like 200,000, and that's not even including, you know, research and development, paying their staff and all that other stuff. So so it's like, okay, how's this company getting their money? They're getting their money from the market, right? Either from doing offerings, or having an ATM, or having warrants that underwriters are exercising and giving them money for. So we go down to here. This is always super important. Cash flows from financial activities. They've gotten 90 million in the past 3 months. How? Proceeds from issuing stock. So offerings. They've done $90 million worth of offerings in the past 3 months, from January 1st, 2020 to March 31st, right? So this is a company that dilutes their stock to raise money. That's why there's so many biotechs on the NASDAQ, because biotech companies are not expected to generate revenue for many years. It takes a really long time to go through the process of getting a drug approved, and there's a high chance it might not even get approved at all. So they need to finance their company in some way, and they do it through stock offerings and dilution. So so if we go back to the chart, the news on this day, by the way, is positive phase 1 results on some cancer drug that they have. One thing you need to do if you're going to be trading microcaps or just stocks that move like this, you need to write down what the news is every single time something like this. Every single runner, you should have a column in your Excel sheet that just says what the news is. And you'll find that phase 1 news is classic pump news. They're pumping the stock. Now, if they're pumping the stock, you have to find out why. Like, why they there's different reasons to pump a stock. And it isn't just so the person can buy low and sell high. Like, that's not the only reason. There's many, many reasons from different players as to why they would be interested in moving the stock up in a pre-market, giving it support during the day, and holding it up to the end, which is what happened here. So sometimes you'll see stocks that get pumped and fade right away. Those happen for certain reasons. Sometimes you see stocks that get pumped, show some weakness, get pumped, show some weakness, and maintain a strong close. That happens for a certain reason. You'll see stocks that get pumped, go up at like between 1 and 3 p.m. and then fade. Almost like 50% of its gain. Those happen by certain manipulators for certain reasons. There's a bunch of different reasons. And the reason I wanted to make this video is this kind of demonstrates why, the common reason why this stock was pushed into pre-market, given support by manipulators throughout the day, and then maintain a strong close. So this is one of the many situations that kind of happens in the microcap space. So phase 1 news, traditional pump news. They're pumping it. It's purely there to generate retail volume, because the thing is, if you're going to manipulate a stock, the only way to effectively manipulate it to as high of a closing price as possible is to get as many retail investors interested. So they need some type of PR, right? So what are some keys that, like, the stock, just from the pre-market, like, what are some keys that the stock's being manipulated? They release the news always early in the morning, pre-planned way ahead of time, right? Because it's easier to pump up a stock in a pre-market when volume's low, it takes a relatively small amount of buying power to start accumulating shares if you're the manipulator who's looking to push the stock price up, to get it to go really high really early and pop up on people's scanners, get retail investors really interested, get day traders really interested. So this early in the morning, so this is a 1 minute chart. And when I look at charts, I look at 1 minute and 5 minute. But early in the morning, I am mostly looking at 1 minute. Why? Because manipulators have very specific ways of manipulating the stock, right? They're constantly trying to get retail investors to buy breakouts, right? So what they do is they pick a moving average. They pick a moving average that they really like, and usually they pick a couple because it's hard to maintain a trend on one moving average because sometimes you have to let the stock fall, either because they're trying to unload shares that they're accumulating, or they're trying to trap shorts, or they're trying to get a potential breakout later become very interesting for longs who want to buy that breakout and stuff like that. So like they release the news and then suddenly you see this 1 minute 9 exponential moving average. So the 1M 9 EMA, super important in the pre-market. And this company, this manipulator it's not even a company, it's the underwriter who's as we will see, this was on May 29th. 2 days later, they did a stock offering. Who did the stock offering? Cohen, Roth. I don't know SVB that well, but these two guys, known stock manipulators. Anytime you see an offering done, a couple days after a massive manipulation like this, go write these people's names down for that play. Have a column in your Excel file that just writes down these people's names. You will see Cohen and Roth and H.C. Wainwright and Aegis Capital and Cantor and Lincoln Park Capital and all those people do this same shit the exact same way over and over again for years. Completely legal, by the way. Like the SEC does absolutely not give a shit about this massive manipulation going on by these guys. So what these guys are doing is they're teaming up together and they're providing support for the stock. So they released the news. Oh, by the way, a good way to tell that this was heavily manipulated, this is a $225 million offering that was done 2 days after this closing price. These offerings take weeks to prepare. So what does that mean? That means that these guys, these three people, met up with this company weeks ago, like 3 weeks before this even happened. And this company's like, hey, we got this PR coming out. It's for this positive cancer phase 1 results. Which, by the way, again, phase 1 is so meaningless in the biotech space. But it's like, it's good enough for retail investors to eat that shit up. It's a perfect retail investor, buy the news. They don't know what they're reading. They don't know anything about stock manipulation. They just see positive cancer research and they go, oh my God, time to buy. Look, the stock's up 100%. I better start buying, and all that crap. So they schedule the PR. They have the exact date written down. They know they're going to release it, and they're going to release it at the perfect time, like 8 in the morning. So plenty of time in the pre-market to pump it up. These guys are going to come in. They're going to start providing support because these guys are essentially investment banks that are able to, that trade. They do these deals, but they also trade. And they provide a lot of support and they provide a lot of manipulation of the stock. Because if you think about it, these guys get paid based on this offering. They're making millions and millions, tens of millions of dollars based on this offering, but they're also actually making money based on the stock manipulation because they're putting out this PR. By the way, there's like a crazy, insane PR machine. Like these guys have so many connections with so many different PR departments, and they get put on, like this stock gets thrown in front of everybody's face across the entire internet, across like every single medium you can imagine. And there's entire PR companies that are responsible for this, like working with these investment banks to generate the retail interest to support their manipulation. So it's just crazy stuff, really, really insane stuff. But anyway, they're making money on the manipulation because they're buying at the support and they're selling into these breakout. They're buying at the support, selling into the breakout. So they're making money here. They're making money here, and they're making money on the stock offering. So they're heavily incentivized to do this. And like I said, the SEC doesn't care about the manipulation. Actually, the SEC makes money from these stock offerings, so they especially don't give a shit, dude. So anyway, I start seeing this company. It's like your very standard 1 minute 9 EMA push. They let it fall. They'll support it at the 20. This didn't even fall to the 20. It just fell a little bit below it. Again, another big push. Squeezes any short that got in here just got squeezed because every short seller is risking high a day right here. They get squeezed, goes back on the 1 minute. These get squeezed again. It's just like falls to the 20, gets squeezed again. And now there's some weakness. Now there's some potential weakness, right? Because they've squeezed it so much and they've accumulated so many shares and now they have to start selling. That's why you get these crazy, like one last high day clear out. This breaks high day, instant huge red candle. This red candle is not short sellers like all deciding to short at the same time. This is the manipulator who started accumulating shares here. He's selling. He's just selling. They're reducing the amount of size of their holding that they had to accumulate during the manipulation up the stock. So all these red prints that you see on the level 2 and tape. Oh, by the way, on the level 2 and tape, look at the level 2 and tape at these key areas, at this key area. Look at it down here. Look at it. Like, you'll see the same bid manipulation in the same market orders every single time. It's these guys. It's these guys. Like, that's these guys trading. That's these guys supporting the stock and manipulating the stock. So anyway, we get some crazy potential weakness here, right? So it's like, okay, like, it's not following the 1 minute 9 EMA anymore. It's not following this. It cracked both of them, right? So pretty weak, like not a bad short right here. But I'm thinking, okay, maybe these guys have an ulterior motive, right? Maybe they're looking possibly to do an offering. So how do I know that? So we go, and you have to know, how does a company do an offering? Well, in order to do an offering, a company needs a shelf. So a shelf in this case is an S3. So here's a shelf. Okay, here's their most recent S3. Let's see, $400 million. Huh, okay. If you click on SEC Edgar, does this shelf have an effect? Yes, as you see it does, which means they can use the shelf. Okay, it's $400 million. How much of that shelf have they used? So this is the offering that happened later. So this is the offering that we care about. By the way, if you ever see an offering that's like 121, 122, this will be blank. This is like, hey, we're about to do an offering, but we don't know what the price is yet. So that's why this is blank. And then they do the actual offering. So here you go. 84 million. And the shelf was for 400, which means they have over 316 million of the shelf left over, which is huge. They have $360 million worth of their shelf, and they are not under baby shelf restriction. If you don't know what that is, just type in NASDAQ baby shelf restriction, baby shelf rules. Essentially, if your public flow is under $75 million, so the dollar value of your public flow is under $75 million, you're limited in the amount of money you can raise. This company, that doesn't apply. Their public float is over $75 million, so they can use the entire remaining shelf, which is $316 million. It's like, okay, they have a $316 million that they can dilute at any time they want, which also includes intraday. So they might be doing, this is a possible candidate for an intraday offering. Or maybe they're trying to just pump the price up as high as they possibly can. And then they'll do an offering the next day, because I think this was a Friday. They'll do an offering over the weekend, or they'll do one on like Monday or Tuesday, which is what they did. So a couple possibilities, like, okay, maybe possible intraday offering, maybe possible, let's see how high we could get the stock price up. So now I have a couple theories, right? I'm like, okay, maybe they're just looking to get it up as high as possible, which in that case, manipulations play out differently that way. As opposed to other situations, which I could do more videos on, where they'll pump the price up, it cracks, and then it fades all day. Those happen for other very specific reasons. A good example that I just looked up is actually GENE on July 15th. Again, purely manipulated, but cracks, breaks the key MAs that was supporting it. See here, here. Actually, the 5 minute here is a lot more obvious. 5 minute 9, 5 minute 20, manip, breaks both of them, fades all day. Okay, but this happened for different reasons than ADAP, but that's another video that I'll make one day. Back to here, back to the 1 minute. So if they're trying to hold a stock price up, something that's super common that happens is a stock will bounce off this white line. And what is this white line? This white line is known as the 1 minute 200 EMA, which is super important in day trading, especially microcaps. Super important. The 1 minute and the 5 minute, which is down here. The 5 minute didn't come in handy for this because they were keeping the stock price up. 5 minute is a great target for when it fades in the afternoon, but they were holding the stock price up, so it didn't come into play. But the 1 minute, so you have this morning weakness, right? And it was riding up the 1 minute 9 and the 1 minute 20, breaks both of them here, gives a couple of weak pushes, keeps breaking it. Market open, let's see if it breaks the 20. Here's the 20, also here's the 50, kind of like the last line of defense. Gets stuffed. Now I'm thinking, okay, that's a good short. But if they're going to manipulate it, what usually happens is they let it bounce off the 200 and then they start riding it back up. So if I'm shorting in this pre-market weakness, especially after this confirmed like getting absolutely stuffed by the 20 and the 50 1 minute EMAs, my first price target's gonna be here. So as you see, it rides down pretty nice. It rides just like it rode up the 9 EMA and the 20. It rode down. See, so very calculated, and like you'll see the same, just how you saw the same bid support. You'll see the same ask resistance going down. You'll see the same market orders. Just instead of buy market orders, you'll start seeing sell market orders. Going down the MA down here at these exact price points. Like it's if you watch the tape, if you record your screen and watch the tape, it's so obvious. So you let it bounce to the 200, cracks it, and then usually if the 200 gets cracked, if the stock is truly weak, the volume will disappear and it will hit the 200 as resistance as it goes down. It'll just keep hitting it and hitting it and hitting it and hitting it as it goes down. This cracks it, quick reclaim on not super low volume, pretty much the same volume as it was trading a little bit before. So I'm thinking, oh, possible reversal. So I'm like, okay, the 1 minute 50 acted as resistance, and VWAP is kind of like the last line of defense. Let's see what happens in this channel, because a lot of times what happens is it goes back into this channel, right? We have the 1 minute 200 at the bottom, VWAP at the top. And depending on where it goes, if it cracks, super bearish, super bearish, very likely to fall to the 5 minute 200. Like it will crack this. Here's where like the 1 minute 200 is. It'll crack this and it'll fade to this. And it's a super high odds short. However, if it's in this channel, this white line is blue lined, and it breaks it on high volume, it's super bullish. And as you see, down here, we had fading volume, getting really weak. It's in this channel, getting really weak. And suddenly breaks VWAP, gigantic candle, followed by another gigantic candle, like Q2, like biggest candle of the day right here. So it's like, okay, manipulation is on. So I'm thinking, okay, possibly this will keep going until higher day. They'll just keep pushing us up on the 9, and as you see, just bouncing straight off the 9, straight off the 9, straight off the 9, straight off the 9, and it'll just keep riding this all the way to high day. But in this case, they rode it and then hard crack. So I'm like, okay, that if you went long based on these candles, by the way, usually fantastic long situation. As soon as this candle happens, you got to get out, which in that case, you still probably made a little bit of money. But then you reassess the situation. It's like, okay, like, what do I want to do? Like, I know the 200 is acting as support because it broke it, reclaim, bounced off it here, reclaim, and suddenly here, bounce off it exactly, reclaim. So it's okay. They're providing support on the 200. And if they're trying to get the stock price to close as high as possible, they're definitely going to want to break this high a day, the intraday high a day, which is very important, and then the pre-market high a day is the ultimate goal. Because the thing is, if you're supporting a stock, you're absorbing so many shares. Like they have to provide support at these key levels so the stock doesn't fall. So they need to sell. And like I said before, it's like, how do they sell? Well, where does most of the retail buying happen? Like, where does every chat room sheep long like to buy? They like to buy on the breakout. Like, they like to buy on these candles, like this big green candle that broke this intraday high day. They like to buy on new highs, buy on new highs, buy on new highs, buy on new highs. That's where they like to buy. So if you're manipulating the stock down here and down here and down here, that's where you want to sell. You want to sell where the retail investors are buying, right? That's why a retail investor is called a sucker, right? This is a word that's been around in Wall Street for hundreds of years. Since the 1800s, you'll see guys call retail investors suckers, which is just a perfect name. And the 5 minute confirms a lot of what we're seeing on the 1 minute. A lot of times on these big pushes, again, here's that big candle after this super weakness. They'll start riding it up the 5 minute 9. So the 5 minute 9 becomes super important. They'll let it fall a little bit below, but they'll never let it close below the 5 minute 9. It might fall a little bit towards the 20, but they'll push it back up and keep riding it up. So now you get this high day, intraday high day break, falls back to the 9, they support it, falls back to the 9, they support it, and now you're looking great. By the way, great long opportunity. Like, you can go long once you see the support come back in. You can go long and hold into this high day breakout. Like, as long as this 9 is holding, you could just keep holding this long, and then once it breaks this high day, you always want to size out a good chunk of your position, like 30 to 40 to 50% of your position. You want to size out, because so many times the reason why a stock reaches new highs and then instantly gets rejected, like I just said, because that's where they're dumping. They know everyone wants to chase this, so they know that's the perfect place to sell, right? Like, you sell into the suckers, right? You get a bunch of people bagged on this big candle at this super high price. This is 2.7 million shares in 5 minutes at $12, right? So $60 million in money traded in 5 minutes, and they just sell into that. And then usually what happens is they have to start unloading, because now we're getting later in the day. And since we're getting later in the day, there's certain SEC rules that, if you buy too much of the OS, you have to file with the SEC. And I believe it's 10%. So remember, the guys doing the offering, manipulating the stock, but they don't want to leave a paper trail with the SEC that they like to control and manipulate the stock, right? Like, the SEC turns a blind eye anyways, but they don't want to be filing a bunch of 13 Ds and Gs. And here, I'll show you. Like, here's Form 4s, like these, right? Like, this is what like institutional investors have to file if they own too much of the company. And they don't want that. So it's also they don't want to backhold all those shares, especially because they're going to do an offering later. So it's they don't want to backhold. They don't want to file with the SEC. So as we get later and later in the day, the more and more likely the manipulation is going to end, which is why a lot of times you see these nasty afternoon fades. And that's these guys who were providing support just dumping and dumping and dumping and dumping. So in this case, it's riding up. The 50, the 1 minute 50, and the 5 minute 9 are pretty much almost the exact same line because of how they're calculated. It's kind of like the last line of defense on these big pushes. It's the last line of support as long as it doesn't break this, like it might break it a little bit, but as long as it quickly gets sucked back up, like the manipulation's still on. But as soon as you see a gigantic, nasty red candle the moment after a high day breakout happened, that's these manipulators selling. They're just, okay, it's time to unload. We have to get rid of a bunch of these shares that we accumulated. Which actually makes this a fantastic short, because just like how it rode the 1 minute, the 9 and the 20 on the way up, it's going to ride it on the way down. And an initial price target is actually always going to be VWAP in the 1 minute 200. They'll let it come to here, and if they're trying to support it, they'll, like, it might crack it here. Like, it cracked VWAP in the 200. And usually when this happens, just like GENE, that chart I just showed you, it'll keep fading all day. It'll fade to the 5 minute 200 all the way down here. However, if they're trying to get the higher close, this is very typical. Chops around for a half an hour. This is like a half an hour of just chopping around. If we're going to get a GENE situation, right? Here's the 200. Here's the 200. It might test it once, instantly fails, just starts failing. It breaks it one time for 2 minutes, gigantic red candle, tests it. It just, this is super weak. Very common, but super weak. Keeps fading all day. But here we get the opposite, where it comes back, tests it, super weak, tests it again, and starts climbing. So at this point, if you're short over here, this is the point. This big reclaim, this candle right here, is the point where you just get out. Like, okay, like they're manipulating the stock. Like this action, if it's going to fade, it would have tested it here and fell all day. But now you get a reclaim, you get a test, a reclaim, a VWAP reclaim, and a 200 reclaim, and they keep it up the rest of the day. You just get these choppy bounces off the 200, off the 200, off the 200, cracks it, bounce off VWAP. So they're providing 200 support, they're providing VWAP support, they push it back up. They get the higher close, and 2 days later, they do an offering for $11, right? Which, if the stock fell like GNE did all the way to 8, of course they couldn't do an offering for $11 if they let it fall to 8. So they wanted to get the closing price as high as possible in order to do as big of an offering as possible, right? Because bigger offering means higher price per share, which means less shares you have to dilute, or it just means more money you can raise. More money you can raise without diluting your stock, which is always nice. It's these companies' dream to be able to pump the price as high as they possibly can. If they could pump it to $100 or $1,000, they totally would. But they're limited by retail volume, right? This is kind of like the maximum amount of retail volume you can really generate on these types of stocks. And a lot of times, what happens in a lot of microcaps is you'll see big pushes in the pre-market, but since they can't generate the retail volume that they want, especially at market open, you'll just see nasty crashes. Even though they'll try to support it, but the support will be instantly, like, support only works like here if there's enough retail volume to be like, oh, there's enough support here, this is slowly climbing back up, time to buy. But if those guys aren't there, like, then the person manipulating the stock just is holding on to a ton of shares with no interest from retail, which means now the person manipulating the stock is back holding, right? Very bad. So these people depend on volume to do these manipulations, which is why huge volume like this is always like this. But if you take screenshots of these charts, the 1 minute and 5 minute, with these EMAs, this is the 9, the 20, the 50, and the 200, you'll see the same support. You'll see the same 200 manipulation action. You'll see the same, if we go to 5 minute, when they let it do this lower high, low volume, oh my God, look how weak it is, bam, huge green candle. You'll see this 5 minute 9 EMA be active support during the manipulation all the way. Actually, GNE did it here. GENE, 5-minute 9, here, 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 here. In the middle of the day, they again, same trick. Guys, exact same tricks. Low volume, lower highs, lower lows. Every short seller's thinking, oh my God, this is so weak. Look, 11:55 to 1:10, an hour, almost an hour and a half of weakness. Shorts just building their position, building their position, building their position. So many shorts getting trapped right here. So weak. Oh my God, this thing's gonna fade. I'm gonna be so rich. Bam, gigantic green candle. This candle, huge green candle. And just how it rode the 5-minute 9 up here, look what happens here. Starts riding the 5-minute 9 up here. Then we get again to the afternoon. Again, usually between like 1:30 to 3 is like the key time frame. They do high day clear out, dump the stock. But in this case, instead of holding it up for a higher close like ADAP, they let it dump all the way down. And those are the best. And as you see, it follows the 5-minute 9 all the way up, it follows the 5-minute 9 all the way down. Let's actually pick another stock that everyone should know, because it was absolutely hilarious because so many people blew up their account, even though if you understand how this stuff happens, it was actually a fantastic long opportunity and then later a fantastic short opportunity. SPI, $1 to 47. Surely there's no way you can trade this, right? Surely there's no way to predict that this is going to happen, right? Push on a 5-minute 9. 5-minute 9. So the problem is this 46 is actually making the scale really wonky. Here's a 5-minute 9 acting as support, acting as support. You get to the middle of the day, 12 o'clock. What happens at 12 o'clock? Again, this 46 is messing things up. They let it fall to the 20. Falls to the 20. Decreasing volume. Huge red candle. Decreasing volume. Looks really weak. I bet a lot of people lower high, this high, this high, this high. Lower highs. Decreasing volume. Tons and tons and tons and tons of shorts loading up. Dude, this is so weak. Like, every short seller thinking, every noob short seller doesn't know what they're doing thinking, this stock started at 1 and now it's at 9. Guys, this is up 800%. Lower highs and decreasing volume. This is the time to load up. This is the time to short. We're going to be so rich. Oh my God, this is going to crash to like $3 and I'm going to fucking buy a Lambo today. Then what happens? After these tiny candles, huge green candles, huge nasty green candles start coming in. And what happens after the huge nasty green candles? 5-minute 9, acting as support. Wow, you can literally go long here and not sell as long as this. Oh, here's the best. Like, this just proves how manipulated this is. If we go to the 1 minute, stock goes up. Has this nasty pullback, $28 to 20, right? Surely this is weakness. Surely this is when you load up, right? When you have a 30% 1 minute pullback, stock is dead. Fade city. No way this is going to die. No way this is going to survive. Well, what about the 5 minute? This is why you have the 1 minute and the 5 minute chart open at the same time. Pushes, fades literally exactly to the EMA, squeezes another 130%, squeezes from 20 to 46. Again, same manipulation. And then the key time frame, 2 o'clock. Also, a good thing to know about 5-minute 9 EMA manipulation like this, the farther away it gets from it, so the more crazy the parabolic is on the 1 minute candles, especially in this time frame, very unlikely to survive. They have to dump. They have to dump these shares. They accumulated so many shares during this manipulation that they have to dump it. Also, they want to make money. Like, they accumulated a bunch of shares between 4 to like 14, and now the stock's at 46. Like, they want to take profits, and also they have. By the way, this is why micro floats can be so easy. SPI's total float was like 5 million. They probably bought up 2 million, 2.5. They probably bought up half the float to manipulate this, and they have to dump that float. They don't want to file with the SEC, and also they want to take profits. So once you start getting this crazy choppy action at this time frame, this far away from the 9-minute, the 5-minute 9 EMA, you usually see some type of insane crack. I know a lot of people that like to short into these candles. Something I'm still kind of working my way into, like on these black swan events, on these crazy parabolics, it's actually pretty predictable. Like once you start, especially like this is at like the 5-minute 9 is at like $28, and this is up in the 40s. Once you start getting like 30-40% away from the 5-minute 9 that it was clearly being manipulated on, it's total in this time frame, it's totally unsustainable. But anyways, you get a big crack, you always get some type of bounce, but then suddenly, look at it, get some type of bounce, 5-minute closes below, like right at the 9, and then you start getting 9, just like how it followed the 5-minute 9 EMA up, starts following it down, and look at it, follows it all the way from, you wait for the bounce, it comes back down, you start shorting up in here at 27, closes at 13. There you go. There's a 50% gain on the way down. And look at this, if you're able to recognize common manipulation tactics, up on the 9, down to the 20, gigantic green candles, back up on the 9. Go along here, take some profit. Definitely take some profits up on this candle, because again, you don't know it's going to black swan, but it could. So you definitely take some profits, and you can say, hey, as long as the 5-minute 9 doesn't break, I'm just going to keep holding. I'm literally just going to keep holding until it breaks. And a lot of times it does break, by the way. A lot of times it does break, and you make like, you'll make like 20-30%, and that's cool. But then once in a while, it doesn't break, and you start getting crazy black swan parabolics, and suddenly you bought at 10 and you're getting out in the 30s and the 40s. So and then from studying these black swans that once it starts going this parabolic and it starts getting this far away from the 5-minute 9, you size out completely, and it's an outrageously huge win. And then once it starts rejecting the 5-minute 9 on the way down, you ride it all the way down. As long as it closes below it, which closes below it, closes below it, you ride it all the way down to end of day. And look at that. Black swan that everybody blew up their account on, because every short seller is shorting this weakness right here. You're able to, even if you went short, which by the way, now that you hopefully know about this, you should know that if something pushes on the 5-minute 9, the 5-minute 20 always, especially during the middle of the day, always acts as support. Always, like, it has to hard crack through the 5-minute 20 and it can't hard crack and then quickly come back up. It has to hard crack, maybe give a really weak bounce, and then crack again, right? But that's the only way you can short this. As long as it's following this line and has the green line as bottom support, like this is a potential long. This is you recognizing the lower highs and the decreasing volume, and you're waiting for that big push that pushes it back up on the 5-minute 9 it followed earlier in the day. So that's what I'm thinking. I'm not thinking short. I'm thinking this is a massive long opportunity. So again, you get called hindsight and all that stuff, but on these massive manipulated plays, put these moving averages for the 1 minute and the 5 minute. That's what I did in my file here. Like a 1 minute and 5 minute for every single play. And you'll see it. You'll see the same thing happen over and over and over and over and over and over. And it almost becomes a joke. It almost becomes like, for like 2 years of day trading, I didn't go long at all, because I was like, well, where's the edge? Like, so many of these die so fast, right? Like, how do you know where to get in? How do you know where the risk? How do you know where's a good place to take profits, right? like how, what am I, like, it seems like shorting at least had, even though you might only make 15 to 30%, which is still nuts if you think about it, but like, it seemed more predictable. But then when you start recognizing these guys, recognizing, why they're manipulating the stock, recognizing how they're manipulating the stock, suddenly becomes like, oh, I can go along here and risk the 5-minute 20, right below the 5-minute 20, right? And that's my risk. And that's my risk. And that's my risk. And that's my risk here. And as long as it's following the 5-minute 9 on the way up, I'll take some on the high day breakouts. maybe, if you have a hard time holding onto a long that's up 100, 200%, which I mean, everyone does, take some more out and then just hold a little bit in case he keeps pushing. Makes perfect sense. And you'll see on these highly manipulated plays, it's really not as risky as you think it is. And you can risk relatively little money. You're risking like 80 cents here. Look at this one up like, like, again, this is like crazy black swan, but this went up like $30 from that entry. So definitely worth it. Definitely worth it going through all the charts. And it might seem like there's a lot of lines on your screen. It's a little bit confusing, but it's worth it. Like you start seeing the lines that really matter and when they matter, right? What lines to really pay attention to and when, right? It starts to become easier the more you look at it, and also the more you study the level 2 and the level in the tape at those key levels. You start to recognize like what levels the manipulator is really using to manipulate the stock, and you're able to do that in real time when a stock is appearing on your screen, and you're able to make good decisions with tight risk and big reward. So this kind of went off. I kind of just wanted to make this video about ADAP, but all these are kind of good examples of how manipulators work. Also, ADAP just give you an example why. Who are a big lesson I want to teach in this video is like, it's not, this volume doesn't just come out of nowhere. This support doesn't just come out of nowhere. These squeezes don't come out of nowhere, right? These news events don't come out of nowhere, right? These, it's very much planned ahead of time by people like this, by the company, by its underwriters, the PR campaigns, the manipulations, how they're manipulating it, how far the manipulation can go based on things like volume, right? How much retail interest gets generated, because they need, best case scenario, black swan. Black swan comes from tiny floats with huge retail interest by known manipulators with a huge PR campaign planned ahead of time. By the way, SPI, their reason for manipulating the stock was their public float, like I said earlier in the video, was below 75 million, which means they were under restriction about how much money they can raise. But like I said, they had a float of, I think, like 5.7 million. So if they can get over 75 million, they are no longer restricted. They need a closing price of 1350. Where did they close at? 1361. Okay. So this manipulation solely took place so they can no longer be under the baby shelf restriction, which is $75 million, public float of $75 million. And then they filed a shelf on August 3rd, got the notice of effectiveness September 30th, which means they filed a shelf, which was for, how much was this for? $100 million. $100 million shelf that they couldn't use until they got this notice of effectiveness. They got, oh, sorry, wrong company. They got the notice the next day, $16 million offering, which for this company is pretty big because this is a shit company that makes no money. And they need to pay their executives millions of dollars somehow, and that comes from manipulating the stock and fleecing retail investors. So since they were able to get above the baby shelf restriction, it's pretty interesting. Anyways, they were able to do a big offering and make a lot of money, which was the whole point. So anyways, that's the whole video. Hope it taught something. I got pretty rambly. I just came back from Korea, so I'm super jet lagged, but I wanted to make this video just because I thought it'd be interesting, and I haven't made a video in a while. So let me know what you think. I'll probably do more soon. See ya.